So,
Um, so you guys both feel, not know,
mhm,
but
right.
feel like interest rates are going to go down in the
Mhm.
next year or two. You don't think it's
Yeah, so like in all fairness, I think that what is happening right now to interest rates is that there is nobody wanting to purchase mortgage-backed securities as an investment long term because there is a high likelihood that they'll be bringing rates down. And that's a
Right.
very, very strong indication for people that are watching the market that
Mhm.
says, like like when you're deciding on making an educated guess, because this is like what we do when we're investing, right? We're
Mhm.
making the best hedged guesses. But like if you know that investors don't want to buy, the only customer is the US government at
mm.
this moment, rates are going to be super volatile like we've seen.
Yeah.
So, and
But do you think that there are people that are wanting to buy mortgage-backed securities or waiting because they think the interest rates are going to be lower?
yeah, like once the market is more stable, you have more investors that want to enter into the market. The problem is that a return on a mortgage is like 3 years of payments.
Hmm.
Like it sucks right now for most mortgage companies, right? A lot of mortgage companies like are in a really unique position. It's very expensive right now to get the lowest rate possible. If they sell the lowest rate possible at the peak of the market, there's a high likelihood in 18 months those people are going to refinance, which means all of those mortgage companies are anticipating huge losses.
Hmm.
And like and the same thing with like Fannie Mae, Freddie Mac, Ginnie Mae, they aren't like so what happens in mortgages too is that they release only so many interest rates, so many products,
Mhm.
and they give you so much yield for those products. And right now they're being very stingy with those things because all of the agencies also know that there is a high likelihood of them bringing interest rates down. And so mortgages right now are probably the most expensive I've seen in my career.
Yeah.
Not the highest interest rates I've seen in my career, but the
Right.
most expensive.
Mm.
Can you elaborate the difference between expensive and rate?
Yeah, so like I've worked in the industry since 2002, so interest rates at that time were anywhere between like 7 and 9%. And so I got to see them come down from there to like 5 and a quarter was like historically low rates. And then I've seen it trail all the way down. And a mortgage back then, I mean, wasn't close to $300,000. Like it just wasn't.
Mhm.
And you didn't have to pay as expensive of a cost. Like, I mean, it's not unheard of to see loan estimates with 1 to 2.5 points, like discount points right now to get a competitive rate.
Got it.
And so that's what I meant by like the loan amounts are greater, the cost to get that interest rate is higher, and in general, interest rates at 6% are not historically low anymore.
Got it. So, you made the comment that it seems like the industry is freaking out more
Yes.
than buyers and sellers.
Yes.
So, I mean, you're talking to buyers every day. What are your buyers telling you when they're house shopping?
We've seen a very large increase in cancellations because people are very uncomfortable with the monthly payments. It's a sticker shock. We deal with lots of buyers. Um, and but I will definitely say that like there's a lot of misinformation from real estate agents.
I think a lot of misinformation is probably an understatement, but continue.
I know, and it's hard because like consumers get informed by what they see online, like
Hmm.
via the news. Like there was this headline that was so annoying it circulated like 20 times. Interest rates plummet to 5.3%, lowest drop in like 20 years or whatever it said. And I'm like, you guys, yeah, because 2 weeks ago in 2 days, interest rates were like 6.625%. And so, yes, that is a steep decline. But guess what? That 5.3% interest rate that the news reported is already 1 week old based on the Freddie Mac interest rate survey, and it's no longer plummeted. And you just can't base your facts on that. And like most real estate agents don't know what's going on. Like I talked to someone today and they're like, Lizy, we're headed for a crash. Values are going down. And I'm like, whoa, whoa, whoa. I'm like, values are not going down. Well, how can you tell me? This house is selling for under appraised value. And just so you know, guys, seasonally, there are times of the year when homes will not like appraise, and there's homes times like so. For instance, I know March and May are the most difficult times for a home to appraise because the preceding 6 months are the slowest times in real estate.
Mhm.
Right? It's like you get Christmas, January, February, and that's what they base home values on. But then you have people who are willing to pay higher prices then because there's more competition, and that's market price. Right? So market price is what somebody's willing to pay today. Now, a home might be worth 390,000, which is in this case is what happened. But that home sold for 360. It was listed for 370. Obviously, that real estate agent didn't list the house for 390. again, like I said, there's that huge variance between opinions of value. It's like the appraiser and the real estate agent looked at the same information and they didn't sell it for $390, right? Now that buyer didn't lose $30,000 in equity. Do you know what I mean? Neither did that seller. They didn't even know they had that equity.
Well, I think what the sellers are experiencing and what the realtors are experiencing is that we have seen a shift. So again, since last year, we have seen the traditional home buyers pull out or be pushed out essentially by these investors, by a lot of institutions. You've got the institutional flip investor as well, the Open Doors offer pads, and of course Zillow before they pulled out as well. So you had these corporations that were willing to pay significantly more than the consumer. So they started driving the bus, okay, in a sense of this price appreciation. That's where the risk came in. So the market, as of today, flash forward to the last technically 4 months, but really becoming extremely noticeable in the last 4 weeks, because institutions, as the interest rates pushed out more and more traditional home buyers, the institutions and the cash investors were the ones in control. And when they realized it, they pulled out, waiting for prices to come down. And some of these institutions even pulled out of their escrows, just relinquished their earnest money and said, we're going to sit on the sidelines for a while and see how this all plays out.
So the funds that were buying these properties, you're saying even as 4 months ago, they were starting to see, oh crap, we're the ones buying all the houses. We need to pull back.
They were the ones. Well, we've been telling them this for a year, that they are the ones pushing the prices up. I mean, who would have thought that in Greater Phoenix, in the latter half, in the slowest period of time, the last half of the year is typically a decline in demand from the peak, which usually hits us right around March, April, May, and what's under contract all the way to December. It's a gradual decline. Well, right after June, all of a sudden, Zillow and Open Door decided to have a clash of the titans in Greater Phoenix, pushing prices up, saying we're going to take over the market. And then they got to win. Whoever won got to take the trophy of most losses in 2021, which I believe Open Door won that for the year of 2021, and Zillow won for their entire career of flipping from 2018. But anyhow, aside from that, the thing is that created a perception that demand was just going crazy. But what happened is those companies had to sell to, guess who? Somebody on the other side, because they're not holding properties.
Right.
And when the general population is pushed out, guess who they were selling to? Institutions. And so when institutions pulled out, they are now having to turn their attention, them and the builders are now having to turn back to the same people that they pushed out and kicked to the curb for the last year or so, saying, hey, we'd really like you to come back now. And what if we pay down your interest rate? What if we pay your closing costs? I mean, this is actually the time where you got that 3% down FHA buyer that needs a little bit of help. You can walk them down a runway right now and auction them off because they're golden.
So